give us your sense of the markets at the moment and where we're headed for this week.
Good morning, Alishia. I think essentially we're seeing a choppy recovery here. Last week the market was down 4.2%, and the previous week we saw it was up just over 3%. I think that essentially shows that, yes, while we are seeing some buyers, particularly from the internationals, I think many of them are looking beyond the shake-up that we're seeing in the banking sector now and looking at what they consider as fair value for these companies over the long term. I think we're seeing a lot of international buying, but on the local front, we're not seeing that demand being matched up. As we know, the stockbrokers are still under pressure with the, legacy of margin loans, and until we see, I think we still need to see a lot more support from the regulators, particularly the central bank. So to answer your question, the outlook I think is still choppy, probably into the first quarter of next year when hopefully we'll see the impact of the stimulus initiatives of the government, particularly with the asset management company they are looking to set up to manage toxic assets of the banks. Yeah. And we might see some recovery, I think, going into the first quarter. But beyond that, I think into the second quarter, by then we should see positive results from several banks, and I think that might be a catalyst going forward.
Before we get into some of the results that have surfaced over the past week, let's just take a look at this comment out of the central bank saying that, the Nigerian government may acquire shares in some of the 9 banks it's rescued in the last 2 months. I mean, this after we had Central Bank Governor Lamido Sanusi emphatically say that none of these banks were going to be nationalized. What is the markets made of that news?
Well, that's the news that came out over the weekend. I think, it does sound contradictory, like you've hinted. The CBN governor has always said consistently that they're not looking to take over these banks over the long term. They are looking to stabilize these banks and perhaps get them into the hands of different management to move them forward. So I think really it's really contradictory news, and I don't think the market is making much of that. I think what the market expects, which is what we expect, is that many of these banks will be cleaned up, so to speak, and probably set up for possible acquisitions by interested parties.
In the meantime, the markets have been waiting for results to be released out of the major banks, and we've seen the first of those now coming to the fore, one being UBA. Market reaction to those numbers which were released on Friday?
The stock closed lower. Perhaps I think it signals the sentiment from the local market, which I mentioned. Many of the local investors are short-term oriented, and they're looking at a UBA posting a 7 billion loss after tax and looking at the impact of that. But like I said, I think more of the international buyers and probably portfolio investors, institutional investors, are looking more longer term. And the reason for UBA's performance is not far-fetched. It's simply because of the provisions that they had to take because of the central bank's special examination. There was a provision in their numbers of about 40 billion that has been linked directly to the central bank's intervention. If you back out that alone, what you would see is that UBA is probably trading in single-digit Ps. I mean, in one scenario, we see UBA trading at a PE of 5, and going forward, looking at the market stabilizing over the longer term, definitely fair value. There is fair value at UBA at the current levels. So I think that's the story really for UBA. Yeah. It's really the issue of the provisions short term.
Well, of course, just for our viewers to recap on those numbers, we had gross earnings up by 17%, strong growth in income from international operations specifically, and then the bank making a provision of 41 billion naira for potential loan losses moving forward. At the same time, Wole, we had GT Bank out with numbers as well. So how did those compare?
Well, GTB, they reported a profit, even though, as we had seen in previous quarters, they also had to take a huge hit from the provision side as a result of the central bank's intervention. I think one interesting point concerning GTB's result is the gross earnings growth, just less than 30 billion in the most recent quarter, and we haven't seen that growth compared to the previous quarter is down about almost 50%. So it just shows it's really a sign of the times that in the short term, most banks are cautious about growing their balance sheets. Obviously, there are constraints with regards to deposit growth in the short term. So really, that's what GTB's results reflect. Well, but over the long term, we still think it's a good buy.
Well, of course, despite some of the opportunity that's starting to emerge in the banking sector, what we are starting to see are investors' interests slightly shifting from banking to other sectors that offer stability, that offer good dividends. What would be a stock pick in your books that demonstrates those characteristics, stability and good dividends?
Stability and good dividend. I would look in the short term, looking at the market as it is, the likes of Benue Cement. I think it's a good stock going forward. It's part of the Dangote group, and I think as we've seen the increase in their capacity, we've seen very, very strong numbers coming from that front. The likes of Guinness and Nigerian breweries have been very, very good in terms of giving that dividend flow, but looking at the current yields, I think they're a bit pricey in the short term. Beyond that sector, the likes of flour mills are looking more interesting. Yeah. And they were hit by huge exchange losses in the previous 2 quarters as a result of the sharp depreciation of the Naira. But as we've seen, the Naira is a lot more stable going forward. And with oil prices about $77 over the weekend, I think that definitely flour mills is looking good.